Welcome to the deep dive. Today, we're examining a development that's sending significant ripples through the tech world and government circles alike.
Yeah, big ripples.
We're going to unpack the unprecedented move by the U.S. government to take a significant stake in Intel. This isn't just about one company. It feels like a dramatic shift in how industrial policy might be playing out.
Absolutely.
We've gathered all the key insights for you, from the breaking news to the deep financial implications. Okay, let's unpack this.
That's right. This is far from your typical business headline. What's fascinating here is really the sheer scale.
The scale, yeah.
And the potential long-term ripple effects for technology, national security, and maybe even how we view government's role in the private sector.
Okay, let's jump right into the big news then. What actually happened that has everyone talking?
So the U.S. government has officially picked up nearly a 10% stake in Intel.
10%? Wow.
Yeah. President Trump made the announcement himself, calling it one of the most dramatic interventions in the private sector in decades.
Decades.
And this followed, weeks of turbulence for Intel and political pressure on the CEO, Lip-Bu Tan.
Ah, yes. I remember the talk about his ties to China.
Exactly. He'd face criticism for that. So it's a move packed with layers, really.
And how did the markets initially react to this bombshell announcement? Was it a sigh of relief or more uncertainty?
Initially, there was quite a positive reaction, actually.
Oh, interesting.
Intel shares rose on Friday right after the news broke. And that was helped by a $2 billion SoftBank infusion earlier in the week.
Right, the SoftBank deal.
So for many, it definitely brought a sense of relief, at least in the short term, seeing that kind of significant backing come into play.
So the government now owns a chunk of Intel, a big chunk. But how did they actually get this stake? What's the structure of this rather unconventional deal?
And here's where the mechanics get particularly insightful. The government didn't just write a check.
No. How?
Instead, $8.9 billion in CHIPS Act grants, which had been previously promised, mind you, but not yet paid out to Intel.
Okay, the CHIPS Act money. That's for boosting domestic chip making, right?
Precisely. It's all about incentivizing companies like Intel to build more fabs here in the U.S., national security, economic independence, that whole push.
Got it.
So these grants, that direct funding, were converted directly into equity.
Wow. Okay, so they turned the grant money into stock.
Exactly, which immediately makes the U.S. government Intel's largest shareholder, just like that.
Converting grants into equity, that's certainly an unconventional way to acquire a stake. What were the financial terms? Did the government get a good price?
They certainly got a remarkably good deal. The price paid was $20.47 per share.
$20.47. And how does that stack up?
Well, put it in perspective. SoftBank's deal just before that was at $23 a share.
Okay, so lower than SoftBank.
And the market price itself closed at $24.80 on that Friday. So yeah, the government acquired its stake at a notably lower price than other recent investors and well below the market value at the time.
Interesting. And beyond the immediate acquisition, are there any other significant clauses or stipulations in this agreement? Anything about long-term interest or control?
Yes, a very significant one. There's a clause that says if Intel's ownership in its foundry business drops below 51%.
The foundry business. That's where they make chips for others, competing with TSMC.
Exactly that part. If Intel's stake drops below 51%, the government gains the option to buy an extra 5% stake.
Another 5%. At what price?
Again, at a favorable price, $20 per share.
Wow. So that really signals a strong long-term interest in keeping control over Intel's manufacturing, doesn't it? Especially that foundry part.
Absolutely. It underscores the focus on maintaining critical domestic chip production capabilities.
This whole situation seems to have, a strong political angle, too, especially with President Trump's involvement. What was his initial stance on Intel and CEO Tan, and how did that change?
Well, it was quite a shift. Trump initially called for CEO Lip-Bu Tan's resignation.
Loudly.
I remember that. But then, after a meeting, he completely reversed course, started calling Tan a partner, and actively pushed for this deal.
Quite the turnaround. What do you make of that shift?
It's very telling.
Yeah.
It suggests a strategic pivot, right? Moving from just wanting a leadership change to actively intervening to secure Intel's domestic capabilities, the focus clearly shifted.
So is this Intel deal just a one-off? Or does this kind of government intervention fit into a broader pattern we're seeing from the administration?
Oh, if you connect the dots, it absolutely fits into a broader pattern.
Like what?
Well, think about it. The administration previously secured that 15% cut of NVIDIA and AMD's AI chip sales to China.
Right, that was controversial.
And they also got that golden share in Nippon Steel's U.S. operations.
The veto power share.
Exactly. So there's been this consistent tendency to, let's say, pressure corporations, even universities and media, using executive order settlements. This Intel deal feels like a strong continuation of that more hands-on approach to industrial policy.
But this interventionist approach, it definitely isn't without its critics, is it? Who's pushing back and what are they saying?
Oh, absolutely. You've got critics like Senator Rand Paul, for instance, who've been very vocal.
What's his argument?
Calling it government overreach, describing it as, quote, a step towards socialism.
Strong words.
Yeah. It really brings up that fundamental question about the right boundaries, between government and private enterprise. Does this help or hurt innovation in the long run?
Okay, so we've seen the politics, the deal itself, but let's sit back again. At its core, what's the big strategic reason? Why is the U.S. government doing this? What's the long game here beyond just helping Intel?
Right. This isn't just about saving Intel. It's about the U.S. really needing, a strong domestic semiconductor champion.
A champion against TSMC and Samsung.
Exactly. In that intense global race. For the first time ever, the U.S. government holds a direct equity stake in one of its most critical tech companies.
That's huge.
It is. And it could very well become a template, a model for future industrial policy. It's a massive precedent, fundamentally changing how the government might interact with vital industries.
A massive shift indeed. What does it signal about U.S. priorities globally?
Well, I think it signals two things.
Yeah.
Both a degree of, let's say, desperation.
Desperation. Because Intel's been struggling.
Yeah, Intel has been struggling against TSMC and Samsung in making those cutting-edge chips. That's no secret. And those chips are crucial for everything from AI to defense.
Right.
So desperation, yes, but also a very clear strategic interest. The U.S. wants and needs a robust domestic semiconductor industry. This action just underlines that commitment.
So you think we might see more deals like this, using CHIPS Act money for equity?
I think it's highly probable, especially for critical technologies.
Okay.
Future CHIPS Act deals could very well follow this direct equity model.
Okay, so the stage is set with politics and strategy. But what about the money? The cold, hard numbers. How's Wall Street reacting now, considering Intel's underlying financial health? Is this intervention seen as a real lifeline or maybe just a Band-Aid?
Yeah, the investor sentiment is definitely mixed. You see both sides.
How so?
Well, on one hand, the deal brought that immediate relief we talked about. The shares popped. There's optimism that government backing provides, a financial lifeline and maybe a political safety net.
Okay, that makes sense. The stability argument.
But at the same time, Wall Street is asking the tough questions. Will government ownership genuinely help Intel thrive? Or will it just slow the company down with politics and red tape?
That's the core tension, isn't it? Stability versus potential interference. How do you see those forces playing out for Intel?
It's the million-dollar question, or maybe the billion-dollar question here. Because while the deal provides a cushion, Intel's deeper issues haven't vanished.
Like
Lack of chip leadership compared to rivals, those persistent losses we've seen, and the ongoing pain from restructuring efforts. The financial picture really reveals why this intervention became so pivotal. Maybe we should zoom out and look at the trends.
Yeah, let's do that. Forget the exact quarterly numbers for a second. What's the story the financials tell? Starting with the revenue.
Right. So on the revenue side, Intel's top line has basically been struggling. No consistent growth.
Flat to declining, wasn't it?
Pretty much. After a small bump late last year, there was a significant dip. It just shows they're having persistent challenges, generating sales, capturing market share. Even with all this investment pouring in, they seem kind of stuck.
Okay, stuck on revenue. What about profitability? Gross margins?
Gross margins have been volatile, very volatile. After a really weak period, they did recover somewhat in Q4 2024.
Brief recovery?
Brief is the word. They've eroded since then, which tells you Intel is still facing manufacturing inefficiencies, pricing pressure. It hits their core profitability hard.
And their spending. Are costs under control given the revenue issues?
That's another key issue. Operating expenses are stubbornly high and consistent.
Not shrinking with revenue.
Not really, no. You've got selling, general and admin costs, R&D, both consuming significant chunks of capital every quarter. And these high, stable expenses just compress profitability further when revenue isn't growing.
Okay, high costs. What about debt? Is that weighing them down too?
It is. Intel carries a significant debt load. Their interest expense has been pretty stable, around $200–300 million per quarter.
That adds up.
It does. Those financing costs are a constant drag on earnings, eating into any potential profit.
So with revenue stuck, margins pressured, costs high, and debt, what does the bottom line look like? Pre-tax and net income.
Yeah, this is maybe Intel's biggest headache, the bottom line. After a truly massive pre-tax loss back in Q3 2024,
I remember that one, yeah.
they saw a tiny brief recovery to a small pre-tax profit in Q4, but then slipped right back into deepening losses in the first half of this year.
Getting worse again.
Getting worse again. Net income tells a similar, maybe even starker story. A catastrophic loss, then a tiny profit, then boom, worsening losses again. Net margins just plummeted.
That is a really stark picture of declining profitability. And for the average shareholder looking at earnings per share, EPS, what does that mean?
Unsurprisingly, EPS, how much profit per share, the key metric for investors, it's been volatile and mostly negative.
So not much value creation there.
Very little lately.
Yeah.
After that slight positive blip in Q4 2024, it went right back into the red.
This really paints a challenging picture for Intel's financial health, highlights persistent structural issues. So given this backdrop, what are the likely paths forward now that the government is a major stakeholder?
Right. That's the crucial question now. What's the path forward? Broadly, people are talking about three main outlooks for Intel with this government involvement.
Okay, what are they?
First, you have the bull case.
The optimistic view.
Exactly. This perspective suggests the government stake stabilizes the balance sheet, rebuilds investor confidence. The idea is that efficient capital allocation, maybe guided slightly, accelerates their foundry expansion, their AI roadmap.
Leading to big contracts, defense, tech.
That's the hope. Leading to strategic contracts, positive EPS eventually, recovering margins, the classic turnaround story.
Bull case, what's the other side?
The flip side is, naturally, the bear case. This argues that government involvement inevitably leads to politics over performance.
Slower decisions, red tape.
Slower decisions, inefficiencies, yeah. The fear is that if Intel still fails to regain ground against rivals like TSMC, those structural issues could actually deepen.
Meaning?
Continued losses, a painfully slow turnaround, maybe further deterioration of the stock because of the debt and overhead. It's like the government bought a stake in a losing team. They injected cash, sure, but will they let the coaches coach or start calling plays from the owner's box? That's the fear about agility.
Politics over performance. That's a real concern. And the third outlook?
The third one is the base case. And this is probably where many analysts land. It's sort of the middle ground.
Okay, what does that look like?
It predicts financial stabilization, thanks to the government backing, but without a dramatic turnaround.
So no explosive growth, but no collapse either.
Pretty much.
Yeah.
You might see flat to maybe modest growth. Margins might inch up slowly. EPS could hover around zero. The government equity provides that downside cushion stability, but it probably also caps the upside optimism for, spectacular growth, more of a slow grind.
A holding pattern, perhaps. So what's your overall closing thought on this historic agreement? How should we view this unprecedented move?
In short, look, this deal gives Intel a crucial cash cushion and political backing. That might help stabilize its liquidity, its debt profile. That's the plus side. But unless those margins really recover and revenue starts growing consistently, the debt levels and the ongoing losses could just continue to drag down any recovery. The financials we just walked through show just how fragile Intel's position really is.
So the government stake is?
It's both a lifeline and a really high-stakes gamble.
It truly sounds like a double-edged sword. Provides that needed stability, sure, but also raises huge questions about political interference, corporate governance, and ultimately Intel's ability to actually innovate and compete globally.
Exactly. Success here won't depend on just the financial engineering or the government backing alone. It comes down to Intel proving it can execute, proving it can effectively compete in advanced manufacturing and AI chips again.
So less of a growth story now.
Much less of a growth story and more of a turnaround bet, a big one.
Yeah.
One that's now backed, for better or for worse, by the U.S. government itself.
What a thorough deep dive into this truly fascinating and frankly complex situation. It really leaves you wondering, doesn't it, what other critical industries might see similar interventions down the road? And how will this balance, this tension between national interest and free market principles, how will that evolve in the coming years? Definitely something to mull over as you navigate your day.
Indeed, the implications are far-reaching. This sets a significant precedent, no doubt about it. Thanks for joining us for this deep dive.
And just a quick but important note before we go. We are not certified financial advisors.
That's right.
This content is purely for educational and informational purposes only. If you are considering making any investment decisions, please consult with a certified financial advisor.